In this video, we'll discuss the recent developments in the financial world, specifically the rand's decline, as global concerns bolster the US dollar. Join us as we break down the factors contributing to this economic shift and its potential implications. Remember to watch the entire video. We also have several videos on the channel that we know you will surely enjoy, so watch them after watching this video. For everything else, free Forex courses, free Forex robots, free indicators, and the broker that I use personally, see the links in the description box below. Today, we delve into the world of finance and currency exchange as the rand faces its worst levels in months. Stay tuned to understand the impact of global jitters on the dollar and how it might affect you. The financial world is in turmoil as global uncertainties cast a shadow over the rand. On Wednesday, the rand hit its lowest point since June, trading at 19.3 rand to the dollar, only to recover slightly to 19.24 rand by lunchtime. But what's causing this decline? It's primarily due to concerns over China and the global economy. Economic data from China and Europe has ignited fears of slowing global growth, sending investors scurrying towards the US dollar. As Christopher Wong, a currency strategist at OCBC in Singapore, points out, dollar strength remains the dominant play. The US has higher for longer interest rates, and its relative growth resilience are boosting the greenback. Additionally, data from the Eurozone and Britain indicate a decline in business activity, while China's services sector reports its slowest growth in 8 months. The euro and pound have also taken a hit. The euro fell to a 3-month low of $1.705, while the pound stands at $1.0259, marking a 3-month low of $1.25,285 on Tuesday. So, why is this happening? Ings Turner explains, there's been a hangover from soft PMIs, particularly in the manufacturing space. The energy situation also plays a role, impacting the euro negatively. Meanwhile, oil prices hit a 10-month high as Saudi Arabia and Russia extended supply cuts. However, European natural gas prices remain below last year's peaks. The Federal Reserve's position adds another layer to this puzzle. Governor Christopher Wallace stated that current economic data allows the central bank room to assess whether it needs to raise rates. Markets are currently pricing in a 93% chance of the Fed holding rates steady this month. Now, let's not forget about China. The yuan fell to a 10-month low against the dollar, sparking concerns. Japan's yen also gained strength after its top currency diplomat, Masato Kanda, issued a warning. Kanda, Japan's Vice Minister of Finance for International Affairs, hinted at intervention if speculative moves continue. This warning comes as the yen hovers around the crucial 145 per dollar level. Traders are closely watching Tokyo's actions, recalling Japan's intervention in currency markets last year when the dollar rose past 145 yen. The Australian dollar also experienced fluctuations, rising 0.1% to $0 and 6,385 cents. This followed a 1.3% drop due to weak data from China and the Reserve Bank of Australia's decision to keep rates on hold. As the rand hits its worst levels in months, the global economy remains uncertain. Keep an eye on these developments, as they could have far-reaching effects on your finances. If you found this video informative, don't forget to like, share, and subscribe for more updates on the financial world. Thanks for tuning in.